Hey everyone, it's John Lanzone, your caffeinated mortgage lender, coming to you today with a quick update on the recent Federal Reserve interest rate cut. So by now, unless you're living under a rock, most people have heard that on September 18th, the Federal Reserve cut its interest rates by 50 basis points or half a point. Now this rate cut was significant because it was the first in 4 years. Now I know what you're thinking. Finally, interest rates are going down. Well, we're seeing that in part, but it's a little more complicated than that. The federal funds rate is actually the rate at which they loan to other banks. But here are 3 things you need to know about this interest rate cut. First, the Fed's rate cut doesn't directly lower mortgage rates. Mortgage rates are influenced by a number of things like inflation, the bond market, and not just the Fed's rate. This rate cut does make it more attractive to investors, which may help ease mortgage rates a little, but it's not a direct one-to-one drop like many expect. Second, this cut is part of balancing the economy. The Fed is trying to manage inflation and unemployment, which is why we're seeing this rate cut. Third, more cuts are expected. We could see smaller rate cuts through the end of this year and into the next, which could help ease mortgage rates over time, but don't expect to return to the 2% interest rate we saw from a few years ago. Remember, the Fed's rate cut doesn't automatically lower rates, but it does set the stage for potential changes in the months ahead. So if you're thinking about buying or refinancing, now's a great time to explore your options.